All right, so let's begin the live financial planning session because there are plethora of funds available in the market suggesting you various kind of returns. But if you are someone who's looking for a portfolio which is more aligned with your financial goals, what should you be doing? How should you be going about your financial strategies across asset class? We will answer all of these questions for you today. I have with me Nisreen Mamaji, CFP MoneyWorks Financial Services. Nisreen, good evening and welcome to the show. In case any viewer is watching us live and want to send across your queries, you can also do that on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the money show at etnow.tv. So, Nisreen, let's begin this live financial planning session for our viewers. And the first query is from Sagar via email. Sagar says that he wants to accumulate 5 crores in the next 10 years and what should be his SIP amount per month, and what are the kind of funds that you should be looking at, and what should be the allocation in terms of funds that he should be adopting in terms of strategy. So I don't have him on the phone line, but 5 CR in 10 years, what's the SIP amount that ideally he should be starting off with?
Sure. So at about 13% compounded annualized growth rate, because we always have to project a certain growth rate so that we can work out the SIP figure. So the SIP would be about 2 lakh rupees, exactly 2 lakh 5,000 rupees at the projected compounded annualized growth rate of 13%. So in 10 years, Sagar wants about 5 crore rupees. So we've suggested an asset allocation for him, which will be 30% in multi-cap. So we would recommend Nippon India multi-cap. 20% in large and mid-cap, we're recommending Bandhan Core Equity. 20% in a small cap, which is Franklin India Smaller Companies Fund, and also a sectoral or thematic fund, which is ICICI Prudential Business Cycle Fund, which would be looking at the business cycles and giving, in the current momentum stocks in the current time period. Having said that, whenever we are investing in the SIP, you are doing it in a systematic manner over a period of time. So here we've recommended 30% towards multi-cap, 20% in large and mid, 20% in small, and 20% in a sectoral fund. So it would be totally about 2 lakh rupees, and all the very best to Sagar on his investment journey.
All right, the SIP amount is somewhere around 2,04,887. That's what you've calculated for him. The funds that you've recommended, Nisreen, are Nippon India Multi-Cap, Bandhan Core Equity, a small cap fund from Franklin, and a business cycle fund from ICICI Pru. Any specific reason behind this fund mix, especially the Bandhan Core and the business cycle fund from ICICI?
So basically, we're just trying to give a comprehensive asset allocation. So he has a bit of the, market cap funds, like a multi-cap, a large and mid, and a small cap. At the same time, the business cycle fund is slightly more aggressive because it could have momentum stocks. So that part, because he has about 10 years, we can add a little bit of an aggressive portfolio into that. So small, mid, and business cycle will be the aggressive part of the portfolio. And 20%, which is a large and mid, we've tried to keep that on the safer side. So that's the logic behind creating this comprehensive asset allocation. The business cycle fund is basically a fund which, looks at momentum stocks which are currently in favor, something like a business cycle fund, and let them select the, right now the themes which are in favor would be infrastructure, IT, banking, pharma, and there are also some smaller funds which would also be part of this, entire sector choices by ICICI Prudential. So a business cycle fund normally looks at the shorter time period and selects funds which are in momentum, which are popular and likely to grow in the next 3 years. He has about 10 years, so small and mid would be a good addition to the portfolio because that is a reasonable time for a small and mid-sized company to become a large-sized company and therefore have some sort of price discovery and value discovery. So Bandhan Core Equity is for the large and mid category. It has sizable amount of large cap in it. So we don't want to duplicate the mid and small since we're giving them separate mid and small size funds. We would select a fund which has a larger amount of large cap in it currently. Bandhan is very conservatively run. So we expect it to be maintaining the portion of large cap which it is has mandated currently, which is on the higher levels of large cap. So that's the reason the Bandhan one was selected.
All right, so that's a portfolio for Sagar. And Sagar, if the SIP amount is too high for you, you can start with whatever you're comfortable with, and then gradually make sure to step up your SIPs. And talking about thematic and sectoral funds, just be in tune with the news flows related to the kind of sector exposure that your fund has. Let's move on to our live caller. I have Renuka with me from Bangalore. Renuka, hi, good evening. All right, we'll try to get in touch with her again, but we have her question. She wants to invest in equity for long term, and she wants to know how can she do that. We will try to connect back with her so that we could get more details in terms of what's the investment time horizon, and is she trying to get into equity via mutual funds for the first time. It looks like she wants to participate, but a very good decision, Renuka, and we hope it's for a longer time horizon, especially if you are deciding to enter this particular asset class via mutual funds. 5 or +5 years should be your ideal time horizon, and if at all it's a strategy which is aligned with your financial goals, the better it is. All right, Nisreen, how would you like to guide her?
So since Renuka has, suggested that she would want to invest in equities, she's a first-time investor. So that case, mutual funds, equity markets, there are various reasons. One is that, they're very transparent. Every month you will receive a portfolio fact sheet where you know where your money is going, as well as a statement of account whenever you want. So you can see how your funds are growing, how your money is growing, what is the risk that you're taking, what is the orientation. Also, you'll be aware whether it is large cap, mid cap, small cap, etc. So, they're very transparent in nature. Second is that there's, you have the capability of reaching out to researchers, analysts, a lot of this time and effort that you do not have at this time as a personal equity investor to facilitate your purchases. So by investing in a mutual fund, there will be teams of researchers and analysts who will be looking at the stock portfolio, deciding the net worth of the company, reaching out to the management, and then making sure this is an ideal company to enter into. As an individual investors, we don't have the time and resources to do that. So therefore, mutual fund is a good instrument for us to enter the equity markets and have these research-based capabilities for us to enter. There's also stability, because if you go in for certain funds, which also would have some amount of balance in them through the, fixed income or fixed assets, you would also, if you need stability in the portfolio, or if you want returns back on the shorter term, that is also possible. So because of all these reasons, mutual fund is a very, very good instrument for an equity investor to get into. Now, you have not mentioned the time frame, but I'm presuming it will be 7 to 10 years upwards that you want to enter the equity markets, because any equity investor must realize that there will be volatility. There will be ups and downs in the market. But if you are there for the longer term, then these short-term blips will be ironed out, and overall the trend could be going up depending on the market and economic conditions. But overall, in the last 40 years, the Sensex has given the highest returns compared to any other equity class. And so we do presume that, because historically this has happened, and also with prospective understanding of the market and economy, the real rate of return over inflation, because it's not only the return that you receive from the instrument that you're invested in, you are more concerned with the real return, that is the return minus inflation, which is currently about, say, 5 to 6% at the 10-year average. So that should be positive for you to enter into the equity markets, because obviously if you're looking at a higher risk, you'll also be expecting a higher return. So over the longer period is definitely an important guideline for you to be investing in equity markets. There are a couple of recommendations. One is ICICI Prudential Flexi Cap Fund. This fund contains all the three categories, which are large cap, mid cap, and small cap. And it's a good category for a new investor who wants an exposure to a diversified equity fund. And another one is HDFC Large and Mid Cap Fund. This does not focus only on the small caps. It's a little safer option as compared to others categories. So we would have large and mid, because you wouldn't have small in the HDFC large and mid. So these are two funds that you can definitely start off with. The mid and the small caps have run up a lot in the last 1 year. So therefore, you should be focusing more on the large cap at this time, and then slowly
Okay,
venturing out into a little more
sure,
risky funds like mid and
sure.
small later on.
Right, right, right. All right, so that's the advice for you, Renuka, to start off your investments in equity via mutual funds. We also have a viewer connected online, Mohammed Hussain. Mohammed, hi, can you hear me? Hi, can you hear me? Good evening.
Hello, yeah, good evening.
Hi, so I think you have sent us a question about investing 30 lakhs. Um
Yes.
okay, so what's the corpus that you're looking at and what's the holding time?
So actually, I would like to, put this money somewhere where will give some decent returns by maybe next 5 to 10 years.
5 to 10 years. Okay.
Yeah.
What's the kind of return expectation do you have? What's the amount of corpus that you're looking at? Because you want to invest 30 lakhs, right? You'll be doing it in a
Mhm.
staggered way. I mean, that's the kind of strategy that Nisreen might want to suggest or recommend. But I want to understand what's the corpus, or is there any financial goal that's aligned or attached to this particular investment?
See, what I actually might be using this for my, kids' education and for my maybe retirement go over.
Education and your retirement.
Yes.
Any approximate amount that you're looking at after 10 years? So both goals are coming after 10 years, or one is after 5 and one is after 10? Do you have a time horizon aligned for that?
No, I may not require the next 5 years. So this would be there at least for above 5.
Okay, 5 plus years, right?
Yeah, yeah, correct, correct.
Okay. Okay. Have you been investing in equity earlier? Are you aware of the kind of asset class we are talking about?
Very, very small knowledge. Very small.
Okay. You don't have any other mutual funds in your portfolio?
I have very small investment done in that in my portfolio, and now I am, more into understanding this, and I'm trying to consolidate that. It's a very small amount.
Sure.
Otherwise, my
Sure.
sort of
Would you be
thinking is
knowing the
very.
name of your funds? Would you be knowing the name of your funds? Because we should not land up in a situation where we give you the same funds where you're already investing. So it will
See,
also help us to.
there are some three ELSs is available that is about some lakhs. Okay, and
Three
right now I'm
ELSS.
just
Did
yeah,
you did
yeah,
you
yeah.
say ELSS? Okay. Okay. And
Okay, so that is there. I am okay, and apart from that, now I am looking into flexi, cash funds. So there are four I have
sure.
not with there.
Sure. Sure. All right. All right.
Okay,
So we'll give you a strategy to invest in equity-based mutual funds. Your time horizon is 5 years and above for your child's education and your retirement also. Nisreen, so although we don't have the entire detail of the amount of corpus that he's looking at, and I think we don't even have the correct timeline also for both the goals, but then 5 years and plus. He really can't go very aggressive in equity. Okay, I think he's got one question to ask as well. Yeah, please, Hussein.
tell me.
Hussein, can you
Can
hear
you
me?
hear
You
me?
want to ask some?
Yeah, yeah,
Sure, go on.
I can hear. That is what the time frame is here 5 years plus. Okay, so the
Yeah, yeah,
part of
5 years
what I am
plus.
the part of what I am expecting, I do not have any clarity because I don't know what kind of data I will get. So I'm
Sure,
just looking into very, good returns with, have a good stability also.
sure, sure. All right, all right. So it's actually 5 years and above. I mean, we still have to consider the risk factor. Nisreen, okay, so what would you recommend? What kind of portfolio would you recommend since we've got some more details now?
We're looking at about 10 years, Mama Hussain. We've just tried to predict that your question did not mention the years, but just as a case example, we can say that you're investing for about 10 years. Your entire corpus right now is about 30 lakhs. At this point, we would suggest that you enter the market systematically and not lump sum.
Let's not,
So you can
Nisreen,
invest
let's
through
not take 10
systematic
years. Nisreen, let's not take 10 years because he said 5 years plus. So I'm not really sure if 10 years is the time horizon that you would want to hold on to this investment.
All
I
right.
think
So for
5
5 years,
to 7 years, we should just take that time frame. Yeah, because the strategy might be very, can get slightly aggressive if we take a 10 years time horizon. So let's stick to 5 to 7
So for
years maybe.
5 years, you can go in for a flexi cap category. We would suggest ICICI Prudential Flexi Cap. You can go in for a larger mid cap strategy, which is Kotak Equity Opportunity Fund. And you can go in for a purely, large cap funds or even balance advantage category, which would include arbitrage and bonds, and a multi-asset category, which would include gold. So these are the few options that you have. For 5 years, I think it would be prudent to go in for a multi-asset. So you can go in for DSP, multi-asset allocation fund. That would include global equity, Indian equities, and gold as well. You can go in for ICICI Prudential Flexi Cap Fund, Kotak Equity Opportunity Fund, which is large and mid. And you can go in for one balance advantage category, maybe ICICI Prudential Balance Advantage or HDFC Balance Advantage, which is slightly more aggressive because you have 5 years. So you could go in for HDFC Balance Advantage Fund. So two, we've given you dynamic asset allocation funds, which is the balance advantage and the multi-asset category. One is a flexi cap category, which would be large and mid at this point of time. And Kotak Equity Opportunities, which is a large and mid cap fund. So a flexi cap will have a small portion of small also. In a 5-year time frame, we would suggest that you don't go too aggressive. So here your risk profile is about moderate aggressive and not highly aggressive. So keep that in mind. Also enter the markets through a systematic transfer plans, STPs, and not lump sums because the markets have already run up to a large extent. So you can slowly enter the market, say over the next 3 to 4 months. Your time frame is only 5 years, so I think you should be fully invested in about 4 to 5 months. Not longer because you are allowing yourself. Your goals are about 5 years away. So this would be a prudent asset allocation strategy. You can go 25% in each bucket. Balance advantage, multi-asset, flexi cap, large and mid.
All right, so that's a
Kavita.
recommendation for you. Hussein. And it's time for a quick break as well. So the viewer queries are going on live on the show, but just in case you want to send across your questions, you can WhatsApp your query and also email us your question. See you after this break. Welcome back. You're watching The Money Show, and we have Nisreen Mamaji today as an expert who's answering your financial portfolio queries. And let's connect with our next viewer. Mr. Kamal Gupta is on the phone line with us. Kamal जी नमस्कार. अपना सवाल आपने हमें दिया, बहुत-बहुत धन्यवाद. बताइए सर, क्या सवाल है आपका?
Namaskar ma'am. I want to know one best mutual fund in each category: large cap, mid cap, small cap, for long term investment. 10-year horizon with 10,000 per month SIP in each category.
All right, 10,000.
20,000. Sorry, 20,000.
20,000 in each fund. Any existing portfolio that you have? Any existing portfolio where you have mutual funds already? Do you have that?
Yeah, Nippon India large cap.
Okay.
SDFC mid cap opportunities fund. Quant mid cap and Quant small cap.
So you have 2 mid caps, 1 small cap, 1 large cap. Okay, you have DSP equity opportunities as well. Okay. Apart from that, you still want to know the best large cap, mid cap and small cap fund in your portfolio. Not happy with the performance of these existing funds?
Yeah, especially Nippon large cap.
All right. So thank you so much for sharing those details with us, because Nisreen, you might just want to shuffle up the existing portfolio.
Sure. So, no, my question is, why is not happy with the Nippon India large cap? Because in fact, that is one the fund that we recommended for large cap. So, I think that maybe you are seeing it on a shorter time frame. Maybe your dissatisfaction is because you have been looking at the 6-month or the shorter term returns. I'm not sure, but Nippon India large cap historically has given very good return in the 3-year, 5-year, 10-year bucket. It's backed by strong capabilities in the management space. So there is no reason not to continue with Nippon India large cap. But if you're not satisfied, you can switch over to iPro Blue Chip or HDFC Top 100. Those are also very good large cap funds. But typically, I mean, I was anyway going to recommend Nippon India large cap. So if you already have a good fund, just continue with that. For process of diversification, you can go in for maybe HDFC Top 200. In the mid-cap space, you can try Mahindra Manulife Mid-Cap. That's a very good mid-cap fund. In the smaller companies, Franklin India smaller companies. Now, if you don't want to do the asset allocation between large cap, mid-cap and small cap, a wonderful strategy for you would be to go in for a multi-cap fund. So instead of doing the large cap, mid-cap, small cap, you can just take 2 good multi-cap funds, which could be Mahindra Manulife multi-cap and PGIM multi-cap funds. Those would also, but investing in two good multi-cap funds, you will still match your targets of having, rather than doing the asset allocation yourself between large, mid, and small. So typically a multi-cap fund must have 25% in large cap, 25% in mid cap, 25% in small cap, and the extra 25% is at the discretion of the fund manager. So you could possibly, I think that you are ideally suited for a multi-cap fund rather than doing the asset allocation yourself. So you can go for PGIM multi-cap and you can go for Mahindra Manulife multi-cap.
All right, so that's the solution for you, Mr. Kamal. We move on and let's take Jishnu's question. And okay, he's got a lot of funds in his portfolio. He's got Mira Asset, LSS Fund, Nippon India Flexi Cap, HDFC Flexi Cap, SBI Mid Cap, HDFC Small Cap, Quant Flexi Cap. 42,000 per month he's been investing, and he's accumulated 9 lakh rupees now. Investment horizon is 20 years. And he has dedicated one fund, Nippon India Flexi Cap, for a car purchase after 6 years. We don't know what's the corpus amount he's looking for that though, but he's tied up that particular fund to a car purchase goal. Nisreen.
So, Vishnu, you are very heavily skewed towards the flexi cap category because you have 4 funds there. Continue with Nippon India Flexi Cap because you've already allocated that for your car purchase. The HDFC Flexi Cap, you can perhaps switch to the manufacturing fund and introduce a sector or a theme in that particular category. And you can stop also the Quant Flexi Cap and instead start the Bandhan Sterling Value Fund, which would be in the large and mid cap space. It's a value space. So, you can then reduce your current asset allocation, which is 50% in flexi caps, about 17% in ELSS funds, and about 17% in mid and 17% in small. So your new asset allocation would then be about 16% in flexi cap, 17% in mid cap, 17% in small cap, 17% in value through the Bandhan Sterling Value Fund, and sectoral thematic, which would be the HDFC Manufacturing Fund, also 17%, and ELSS would be 16%. So this way your basket would be a little wider, and if your time frame is a little longer, you can get advantage of 2 extra funds, which is a value fund and a sectoral thematic, which is manufacturing and currently very much in focus. You can also get the benefit of the manufacturing theme. Your time frame is about 20 years. So I would like to make these couple of changes onto your asset allocation, make it a little more complete, and remove the skewed, you're heavily skewed towards the flexi cap. So we are just altering that a bit. And I hope you, do very well in your investing journey.
Sure. All right, Nisreen, with that, it's a wrap on the show as well. Thank you so much for being on the show and helping our viewers with their financial portfolio queries. And on the show as well, if at all you want to send across your questions, you can do that via WhatsApp number and email ID. Thank you so much for watching. Goodbye.